Good morning, everybody. Today it's just me. I'm super early for our 10 o'clock, 10 minutes at 10. So I'm off to the Suffolk show today. So I thought I'd come on a little bit early and talk to you a bit more about Profit First. So we did the easy bits of Profit First on Tuesday and Wednesday. We looked at the basics of Profit First. What does it really mean? In short, it is a cash flow management system. So basically a cash management system, super easy in theory to implement. We then looked yesterday at the 4 or 5 bank accounts that needed to be implemented. So we have one main account that receives all of our income in cash, and then we have 4 accounts underneath it, one for profit, which we distribute later, one for the owner's pay to cover the owner's monthly expenses, one for taxes, so we're saving now for our tax liabilities that are due later, and the 4th one will be for the business expenses. Now, the theory behind Profit First is that if you allocate your profit and your personal expenses first, and you have your business expenses last, then the theory is that you can't spend the money if you don't have it in your pot. Therefore, you have to be more responsible and more accountable for your own cash. Morning, Amanda. So that's the theory. Now, this bit is the technical bit, the actual reverse engineering of Profit First. So there are 3 stages that we need to go through now. So the first one is to identify what our profit goals are. Now, this is arguably one of the most complicated things. So one of the questions that came up earlier in the week, Anya asked, how do we value financial freedom? How do we value what we are worth? Well, that is a really difficult question, and it's going to be different for everybody. So financial freedom to one person might just be to pay down, say, a credit card debt and to be able to live debt-free. Financial freedom to another person might be to be able to fund a digital nomad lifestyle and to be able to travel and work and pay, the minimum liabilities that they have. Another one might be seeking to invest money in a pension. So whilst Profit First doesn't require you to set a financial goal, I think in order to understand what you're trying to achieve, you need to try and value what that financial freedom means to you. So, for example, it might just be, you want to be able to go out once a week more regularly than you do now. Your business doesn't afford you to do that at the moment, but perhaps that's what you want to do. Perhaps you want to go on holidays once every 3 months. So once a quarter, we want to be able to pay for a nice holiday, a proper getaway from it all, and to be able to afford that. So that might be our financial freedom. Our financial freedom in the long term might be to retire early and have the money to support us in retirement. So we have to have an idea of what our financial freedom is, and therefore what that financial freedom will cost in order for us to have an idea of how much our business needs to support that. So we need to make sure that that objective is smart, so it is specific, it's measurable, it's achievable, it's reasonable, and it's time bound. Now, if I said, actually, I'm a bookkeeper and my financial freedom is going to cost me £1 million, then I'm going to have some really hard decisions to make. Is that really realistic? Is it something that I can achieve? Maybe I can, but I certainly couldn't do it just delivering bookkeeping services. I'd have to think outside the box and do something different. So it is important, I think, to have some idea of what that financial freedom is going to cost you. So we work out what our financial freedom is going to cost us and how much we need to set aside for our profit goal. We're not going to fund that straight away, that bit comes later, but we need to have an idea of how much it's going to cost us. So we calculate that and then we park that to the side. Then we need to look at our owner's pay. How much do we need to survive today, to pay our bills today? So that's stage 2, is to identify what our owner's expenses are, and that is how much we need to put each month into our owner's pot. We then need to look at our business expenses and what our business costs us to run each month. And this is where we have to start making some of those hard decisions. So we need to take all of the costs that are running through our business, everything that we spend each month, and ask whether that really is helping us achieve our objective, whether it's adding value or whether it's cash that we don't need to spend, a cost that, you know, is leaking money out of our business. So we calculate our monthly expenses, and that tells us how much we need to support our business each month. Now you can reverse engineer your profit using the matrix that we've created. So you can reverse engineer how much revenue you need to turn over in order to achieve the amount that you need to survive on for your business owner's pay, the amount you need to put aside for your tax, and the amount you need to put aside for your profit. So you won't achieve your profit goal straight away, but each time you allocate cash into your profit account, you're saving a little bit more for your profit goal. And then you work out what your target revenue goal is, and then you need to assess whether your revenue is currently at the level of achieving that revenue goal, or whether your revenue is perhaps falling short. Then there needs to be an exercise to look at how do you grow that revenue in order to achieve your revenue goal, so that allows you to put costs or money into your profit account, your owner's account, your taxes account, and pay your business expenses. So we kind of reverse engineer profit first in order to tell us how much we need to turn over. It's almost like a break-even calculation, but this is break-even for the whole business to cover all of our overheads. It's not the break-even calculation in the traditional accounting sense. So once we've done all of that, we can start allocating our cash at the end of each day, each week, each month, whatever is most appropriate to our business, to each of those accounts in our profit first setup, and start saving money towards our profit targets, so save money towards paying our owner's expenses, paying our tax, and paying our business expenses. So the actual implementation can be quite complicated, and there's a lot more to it. So tomorrow I'm going to talk a little bit through some of the challenges of implementing profit first. So it's theoretically possible to implement this straight away. The challenges of doing that are always that your revenue is not high enough, you're not turning over the right amount to be able to achieve it. Your costs are too high, you can't reduce them. Your personal expenses are too high, you're drawing more from your business than your business can afford, and you're hemorrhaging cash. So those kind of issues are real showstoppers for implementing profit first, or indeed managing any business and making sure it turns enough profit to be able to support your lifestyle and your own personal goals. So we need to think about what the next steps are and how to manage your business in order to deliver the profit that you need to survive and to thrive. So that is a very quick 8.5 minutes introduction to Profit First. I'm going to sign off now and say thank you very much for joining me. For those of you that are in the BBB club, as I said yesterday, I have changed the way I started working on the lessons for Profit First, and I've moved things around a bit. So I've recorded a couple of the videos. We'll edit those later and aim to get those up in Bloody Brilliant Business Club tomorrow afternoon, probably, along with a workbook. So you can start looking at that and start working out these costs and whether you can implement Profit First in your business. So that should be live tomorrow afternoon. Harry and I will be back tomorrow morning with another 10 minutes at 10 for everybody. And I will be off to the Suffolk show very shortly. So I will see you tomorrow. Have a good day. Bye.